Hey everyone, John Henry here, slingshotfutures.com. Today we're going to be taking a look at MBRX. It's Mike Bravo Romeo X-ray metabasis? Whatever you want to call it. Looking at a breakout stock. Now, when we're talking about breakout stocks, really what I'm looking in on is focusing on the big movers, right? As we can see here on this one, it's currently up 165%. That's what I mean by breakout stocks, right? The ones that are really slamming the gas pedal. Now, these are going to be going over different setups to potentially pay attention to as you go into breakout stocks. Because generally, a lot of times, breakout stocks will be showing up in the pre-market. It's not just one that's going to be showing up out of the blue, usually, unless there's some news announcement or something like that. But a lot of times, these are breakout stocks that have been moving in the pre-market already. So if you're looking at the pre-market volume, it gives you a big clue on what to look for. Usually, it's one of these. So when we're looking at breakout stocks, what are a few things to pay attention to? First of all, I prefer to see the pre-market showing a decent trend. Now, the pre-market is in this gray area here, but as we can see, the last trading day closed right at around that $10, $11 area, and we come into the pre-market and we see a big lift to the upside, a nice pullback, and then good continuation higher. That's a good sign, right? That's a good sign. Price is staying above the VWAP. Everything is looking relatively strong. But we come into the open, and this is something that a lot of traders, especially if you've been trading a lot of these small caps, because this is a very cheap stock, this is something that you want to pay attention to. And what happens more often than not is that the buyers try to get it going, it fails, and dumps lower, right? And then it collapses for the rest of the day, and everybody who's left are just the bag holders who are sitting on a gigantic loss. We want to avoid that kind of stuff. And one of the best ways to avoid that is either A, looking for a really strong market out of the gates, or B, letting the failure move attempt and then picking it back up when it's disproving that failure move. In this case, we had a really nice move to the upside, a double top, a trap high, and it never came back. We tried to get the move up right before the market opened, which is usually indicative of a stop run coming at the open, and that's what happened. They ran down, they hit the stops, and they did blow off the bottom for a good amount. Now, keep in mind, at this point in time, the stock is trading at $1.30, and it spiked down to about $1.25. So, you know, that might only be 6-7 cents, but when you're talking about a stock that's only $1, that's a lot, right? That can be worth a lot of money by itself. So if you're sitting on a loss, or you bought all the way up here thinking that it's going to start breaking out, and then you have to sit through all of this, those 8, 10, 15 cents might add up really fast when you're dropping 10,000 shares at a time, especially since it's only $1. So what we want to do is we want to wait for this flush move to happen and utilize previous structure to our advantage. Very frequently when there's a big flush move, it usually wants to find a level of support. We can see this big level of previous swing high support. It acted as resistance and support a little bit later. Very likely the market's going to want to come into around that area and make a decision. This doesn't mean automatically go out and buy everything you can there, but it's a clue that you want to watch, right? Watch what happens here. Right? The market comes down and retests that area of interest. What happens? The initial test is immediately bought. That's a good sign, right? We can see that buyers are attempting to defend. When the market came back and tried to break lower, it was nothing but wick and then popped back up again. Another very good sign, coupled with an already good sign that it was defended initially. That's a good clue that, hey, we're dealing with a market that could be potentially getting propped up. Now we want to wait for the follow-through. If the buyers are going to take this, we should see a move up, back above VWAP, get back above previous structure, maybe even break a previous swing, just to start showing that we have formation going in the bull's favor. And that's what we had here, right? We had that previous structure held, broke up. We broke above the VWAP, this dashed black line. We broke above a previous swing high. We even closed above it, showing that we do have a shot at the market breaking out higher. That's our clue, right? So now we have a measurable area of interest. We can measure off the low to the high. Utilizing a 50% pullback is the most basic way to get in. As an example, lines up right with the moving averages and the VWAP, and you know your risk is going to be down here. So with that type of approach, it's very simple, right? It's a very obvious risk, which means that the reward should be very obvious. That's what we're looking for. So if we measure that area up, right? If we take a fib tool and we draw on the way higher there, we draw from the low, draw from the low to the high. We can see 50% pullback almost perfectly and then bounces back up. So we know that buyers are buying off of the 50. Now, again, the easiest way to measure this up is if you're buying off the 50, utilize your stop box, and now you have your risk reward, right? So that's our risk. We can take this box and we can move it up to our entry area, and we can see that the reward was right back up towards those highs, and it actually went double up, right? A lot of buyers like going for that 2-to-1 when they're taking this kind of trade, and if we look at the 2-to-1, that was a perfect level of resistance, and that's because everybody's taking profit there. So that's one of the ways in. Utilize previous market structure and then look for that support to come in. Now, there will be aggressive buyers, or if you want to play it with a little bit larger size, buyers will begin building into their positions here. And if it doesn't work out, they can exit when it comes back. But if it does work, their average is going to be very good. So there are a lot of ways you can twist this to be more aggressive, less aggressive, etc. Now, on a structural basis, waiting for a structural play. That might mean a higher high, higher low scenario and then buying the breakout, or utilizing that breakout point that we've been waiting for as a level of support once the market shows its hand and actually breaks to a new high. And that's what we had here. Support, 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 support. You want to know why there was all that support there? Because all those retest buyers were waiting for that to happen. Now, you could also go backward and say, all right, well, falling wedge, right? Another structural type of play. We have a wedge breakout pullback. Nice and easy. If you're more of an indicator type trader, like a stochastic divergence, I don't have a stochastic on this chart and I can throw it on there, but almost guaranteed there's going to be a divergence between these two lows. Just visually, it's really obvious. The market spiked down and immediately failed. There's probably divergence on there. Let me grab the indicator really quick and see. All right, there we go. So I have the stochastic indicator on there. We're looking at this low and that low, and sure enough, there is a divergence on the bottom. So again, a lot of times if you get used to the way that price action moves, you don't even need the indicator. It just makes it easy because you can watch price action. So there's a divergence signal. There's probably another divergence signal there. There's a pullback, like a 50% pullback, a VWAP pullback, a structural breakout pullback, a structural breakout pullback of the previous major swing or the forward swing. There's so many different ways to get into this, but the important thing that you'll notice is we're not just slamming the buy button. We're waiting for the market to come to us. That way we can categorize where our risk needs to be, what our reward needs to be, what are the probabilities of the trade. That way it's going in our trade plan. We're not fitting a trade plan to the market. The market is conforming to our trade plan, and that allows us to take these with a statistical edge, and that's what you're looking for. Now, let's say as an example, this really didn't show up because realistically, that's not a huge move. It might show up on some scanners, but it's probably not going to show up on the scanners until you see stuff like this, right? Where it really goes bonkers. Starting to break above $2, now it's breaking above $3. That's where you're going to hear all of Twitter blowing up about it, and then Benzinga's going to blow up about it, and everybody's freaking out like, oh man, look at this thing, it's going to the moon. That's when it's going to start popping up on scanners, and probably a lot of people didn't see it until over here when it started breaking above 2. So how do you get into the move if you missed all of that, right? If it's up 166% right now, arguably you missed 100% of it. So how are you going to get into that last 66%? Now, there are a few different ways to approach this. One of the easiest ways is to utilize structure, right? Now, structure in this case, because it's gone parabolic, that's not going to help us on a 1-minute time frame. We're going to have to zoom out and look at some of the bigger stuff. Now, on the hourly, there's nothing here that really helps us either. But if we look backward a little bit more and look on a daily structural point of view, what do we have? We have other levels of interest. So if we look at this horizontal level here, this is a gigantic swing high, and very likely something that we're going to want to pay attention to. That's at $2.43. We have another massive swing high all the way up here at $3.34 that hasn't been tested yet. And maybe because this move over here was a gap, it gapped up to that point and failed lower, we might also consider this previous swing down there. Those are all areas that we're going to want to keep an eye on if we zoom into the faster time frame. So because it's gotten away from us, we need an area of interest, and hopefully you see exactly what happened here. We have that area of interest, $2.43. We broke above that major level of resistance, and it didn't just kind of nick its way up and fail down. It broke above it. We closed 1, 2, 3, 4, 5, 6, 7. We're starting to close like 15 candles above that level. We probably broke it, right? There's not much arguing that anymore. So now we're looking at utilizing, like always, previous resistance turns into support. And better yet, we have a two-legged pullback to that support. Now, if you're not sure what I'm talking about, if I take this channel tool here, we'll draw off the high to the low and pop that. That didn't work how I wanted it to. Well, whatever. Let me just drag the main line over there. I'll drag that over there. So you're looking for an ABCD correction. That's just a mess. Let me just hand draw it. So you're looking for an ABCD correction down into a support level. Now, in this case, the ABCD completion was a little bit further down, but we already know that there is a monstrous level of structural support. And that's going to be the caveat. We have an ABCD correction. Even though it's not perfect, we are pulling back with an ABCD correction into a major structural level of interest. That's where we're going to want to see the response. Now, again, aggressive buyers, they'll just buy the level, right? They'll buy at the level. But if you're waiting for confirmation, what better confirmation than a beautiful bull bar off of that level of support? Or better yet, falling resistance to break out of, right? We have a breakout pullback right there on that falling resistance. This is where you start using the patience game. Use it to your advantage. Wait for the buyers to prove that they want to come in by breaking some of these previous levels of structure. Break above it, give us a pullback, and then we can play ball. Now, this may not look like much because of what we already talked about, well, an 8-cent move and all of that, but this time around, this is after the market's gone parabolic. So now you're talking about a move buying in above that bull bar at 259. It spiked all the way up to above $3 to 303. Well, now we're starting to talk 50-cent moves, right? That's a big difference. And that's because everybody's watching it now. The same thing goes over here in this current price action. What do we have? We have a major swing high, and so far they've failed. I don't want to be a buyer until we can at least start breaking down some of this falling resistance, which happened right there. Again, it may not look like a lot, but you're buying at $3 for a move up to 15, right? That's a 15-cent move on an otherwise kind of range-bound craziness up here after everybody's already paying attention to it. That's not too bad. But again, our goal is to try to catch it before everybody's jumped on the train. We want to jump in after it's moved up a lot, but we still need to do it in a safe way. If you're jumping in just blindly, slapping the buy button, today it might have worked, but sometimes, you know how it's going to go. You buy right there when it's breaking out, and then you have to sit through 50 cents of pullback. We want to avoid that by letting the market tell us when we need to get in, and we could do that by simply waiting until right there. So that's going to be looking at setups to watch with breakout stocks. Whether you're early to the party or whether you're late to the party, which is probably going to be more common, there are plenty of ways to get into these moves. You just have to be patient. Don't go out and slam the buy button because, oh, it's up 160%. You've got to play it a little bit smarter than that. Let the market conform to your plan, but follow along with what the market's doing so that you can control your risk and your reward, and that way you can control your probabilities. That's going to do it for this one. Hopefully you found it useful, interesting, maybe something you can add to your tool belt if you're a big fan of these types of movers when it comes to stocks. And Lord knows, going into the earnings season, which is upon us, we're going to have a lot of movers, and they're not just going to be $3 stocks. They're going to be more expensive ones as well. Definitely something to have on your tool belt. That's going to do it. I hope you found it interesting again. And if you have any questions about it, feel free to shoot me an email, jbrink@slingshotfutures.com. Until the next one, though, enjoy, rest up. I hope you had a great Easter holiday. Whether you celebrate it or not, it's a good time to take some time away with the family. And we'll see you in the next one. Thanks.